Hi, and welcome to my next Warren Markets episode. Well, today, a very happy day, green day, if I may call it, for the markets, with the Nifty up about 1.5%, a little more than that. Mid cap and small cap up almost 2.2 and 2.35%, and micro caps up 2.6%. Well, let me lay out some other facts today before I get into the analysis. The advance decline ratio was a massively in favor of advances, with about 2,600 odd advances and only about 350 declines, right? So very broad rally. Next, what are the other facts? Like oil stable at 95, rupee stable at 93.7, 93.8, right? And overall, I would say that today there was a big surprising fact which came through. So, what is the first surprising fact, and then the next more surprising fact? The surprising fact is that FIIs turned buyers, right? They turned buyers to the extent of 666 crores today. And when you looked at the gross numbers, it's roughly both around the 13,000 odd crores, with 13,800, 900 buyers and 13,300 sellers. So the net is 600 plus. So roughly 50-50 in terms of buy and sell. So big change in FII approach over the last few days. We are seeing the selling coming down and now turned into buying. Great news. Well, the other most surprising fact is not a great positive news. It is that DIS turned net sellers today. 600 and no, 569 crores net sell by DII. Okay. Why? Well, we'll go into it in the analysis. But before that, look at the surprising fact. It is a fact that the broader market rallied. So, which means what? FIS don't go and buy micro caps or very small caps. So clearly, if DIs were net sellers, then the answer lies that retail and HNI were the major buyers, and that's why you saw 2,600 stocks advance. So clearly, retail believes that the correction that's happened over the last few days since the war started is now nearing its end, and they feel it's the time to die, and they are rushing into buy. That's the clear answer. Now, before I go into further analysis, let me look at the F&O picture. We've looked at the cash market. In the F&O picture, well, the long-short ratio is now up at, I think, 38 to 62. And yesterday, or the last day the market was there, it was 22 to 78. So clearly from 22 to 38, the longs have gone up and the shorts, of course, have come down. So clearly, FI views turning positive, reinforced by the fact that the put call ratio is now 1.18. It was 0.92 a few days ago. So clearly, there has been, and the number of contracts outstanding on the Nifty futures has come down to about 1.3 lakh. This is from 2.6 lakhs, so almost half the contracts. So clearly, today's rally is also caused by a significant amount of covering the short contracts. So short covering also has contributed to the rally. Right. So now, what is the analysis? Well, first, why do you think this happened? This FII pivot, the retail pivot. It's because of what I would call as the peace pivot. What do I mean with the peace pivot? Well, the failure of the ceasefire talks led to very negative, but subsequently, all the developments there were turned positive. First, we'll talk about the blockade. Now, the blockade itself is a negative, right? They're blocking, but then they said it's a directed blockade, directed only at Iranian shipments, whether it's oil or any other goods. So clearly, all of the ships could go through. So there's an expectation that stuff could flow through the Hormuz Strait fairly soon with the blockade. Second, with an economic blockade, the war has shifted from a ground level troops, fear of troops coming in there, to now an economic way. So it's a less costly way for US to fight the war, even if it continues. Second positive. Third positive is, of course, the usual, the TT, the Trump tweets saying, I expect the war to end closely. So clearly there's something brewing. Following on that is the fact that there's likely to be a resumption of talks at a lower level, but again a resumption of talks. So all of this is pointing. And finally, there is news that Iran is also looking at relaxing itself on the nuclear enrichment thing and giving some concessions on that. So all in all, suddenly there's a build-up that the war could end fairly soon. Hence, oil price still stable at 95 is the best signal of that. So from that point of view then, FIIs have started to unwind their shorts a bit, slowly build up the longs, but they're still, since the number of contracts has come down, the future effect of these F&Os will be lesser, right? But the retail pivot can be directly attributed to this peace pivot. They're feeling that, oh, if the war ends, suddenly the prices will go up, already a lot of correction. So those who already bought some, averaging it out, or those who are trading coming in saying this is a good time to enter and build up long positions. So it's essentially a retail HNI driven broad market rally today. And let's spend a minute to talk about the mutual funds or the DIIs, right? Why are they net sellers today? Well, the answer to that lies in multiple things that we have been discussing over the last few days, right? First, they have used up a huge amount of cash last month in defending the market against the selling with FIIs. So 1.5 lakh crore almost in March. And April, they began strongly, about 7, 8, 9,000 crores per day for the first few days, and then it's dramatically dropped from 2,500 to 1,600 to today negative. So, which means that they are one used up a lot of their cash balance, but second, they're also trying to build cash now for the earnings season. We spoke about this before, so clearly they are cautious about saying, what do I buy now? Right? They're trying to build the cash. So they're clearly buying something. But what are they selling? They're selling what has made a lot of money for them, and they're selling in the large cap space. So that's why the large cap rally, though FIs were buying, was less than the broader market rally, because DIS have been selling the large caps. They're building the cash, buying some things, but so a lot of sector rotation. So then when you look at the sectoral performances, well, today, because it's a broad market rally, everything was green, right? So on a broader market, it was about 2.5% up. So if you look at the sectors which outperform, they are all the high risk, high reward sectors like consumer durables, realty. Surprise being that IT was also a very strong mover today, right? And what is the worst performing sector, which was also in the green, was PSU banks and private banks at about, I think, 1.15% positive. So clearly, I think DIS have been selling out the banking sector and going and buying some other sectors in the broader market, right? But like I said, it's the earnings season drive. So over the next few days, this DIS story will continue to be broadly small negative, small positive until we get clarity around the earnings season. So that's the way the market. Now, will this retail rally sustained? Well, retail is equal to Trump tweet. So if as long as the positive news comes in, they'll stuff in to buy. But one negative direction and the market corrects. Let's wait and see how the retail behaves. I do hope they have the gumption to stick it out through this, because it is true that there's been a lot of correction, and for their positions they are probably averaging it out today, right? So very, very interesting day. Like I say, probably I would say it is the revenge of the retail today in terms of the markets, and one hopes it sustains. But from a medium term investor perspective, I feel that you're still hinging on hopes. This whole piece pivot is still hinging on hopes. There's nothing concrete yet. There are signals there which are being read well. So from a medium term investor's perspective, continue accumulating small amounts, stagger them over, and stick to a diversified portfolio. Do not pick sectors and stocks at this stage. Is my recommendation for a medium term outlook retail investor, right? Thank you, and hopefully look forward to another good day tomorrow on the back of this. Goodbye. Thank you.